What taxes did the Mughals collect? From crops to roads, the empire's treasury was always full. Imagine, you're standing on a dusty road in 𝐿𝐮𝐻𝐿 Hindustan. In the distance, a line of camels approaches, their backs loaded with sacks of grain and bundles of spices. The air is filled with the aroma of cinnamon and cardamom. From the marketplace, you hear voices. Buy cheap, buy fresh, drifting to your ears. But then, another sound rises, the thudding of horse hooves. Soon, the Mughal soldiers appear, eyes stern and hands holding the royal decree. They stop every merchant, check their papers, and ask just one question. Have you paid the tax or not? Those who have are allowed to pass. Those who haven't see their goods seized on the spot. That's when you realize the Mughal Empire's power didn't lie only in its swords, but also in its intricate and ever-present tax system, which kept every citizen tied to the state in some way. From Babur's victory at Panipat in 𝐿𝐻𝐿 to the revolt of 𝐴857, for over 3 centuries, this tax system remained the backbone of the Mughal Empire. The Mughal treasury wasn't filled solely through booty or trade. Its most steady and reliable foundation was the taxes collected from the people. Farmers, merchants, artisans, landlords, everyone was part of this economic mechanism in one form or another. Tax was not just a source of revenue, it was also a psychological tool of governance. It showed whose hands held power and made it clear that escaping its rules was impossible. Today, we'll explore this topic in depth. But before we begin, if you're new to our channel, don't forget to subscribe so you get updates on all our latest videos first. So, without further delay, let's begin today's discussion. The most prominent tax was Karaj. Karaj was a land tax collected from farmers. But it wasn't just based on land ownership, it was determined by the productivity of the land. The Mughal administration would survey the land, assess its fertility and the type of crops grown, and then fix the tax accordingly. If your land was in the fertile soils along the Ganga or Yamuna, where 2 or even 3 crops could be harvested each year, you had to pay a heavy tax. And if the land was barren, the tax was lower, but never so low that you could rest easy. For farmers, this tax often became an unbearable burden. A farmer had to give more than half of his harvest to the royal court. Even during droughts, when crops were destroyed, the tax was not waived. In such situations, farmers would have to sell their household grain or mortgage their land to pay the tax. Historian Abul Faiz wrote in the 𝐼𝐻𝐿𝐴 that Akbar made the Kharaaj system more organized and transparent to reduce corruption in collection. But during Aurangzeb's reign, the enforcement became harsher and the pressure on farmers doubled. Next came Zakat. In Islam, Zakat is considered a religious duty. It was a 2.5% tax collected from wealthy Muslims on their wealth, business profits, and savings. Officially, Zakat was meant to help the poor, orphans, and those in need. But in practice, part of it was also spent on maintaining mosques, madrasas, and religious institutions. This strengthened the empire's religious and social structure. One unique aspect of Zakat was that it claimed to purify the soul. In other words, paying it was not just a financial obligation, but also a spiritual responsibility. However, many merchants and wealthy families tried to avoid paying it by hiding their wealth, keeping fake accounts, and sometimes bribing officials. This shows that the tendency to evade taxes is as old as taxation itself. For the non-Muslim population, the most controversial tax was Jizya. This tax was levied solely because a person was not a Muslim. It was considered a kind of protection tax, which allowed non-Muslims to live in the empire and practice their religion in return for payment. Akbar, as part of his policy of religious tolerance, had abolished Jizya, which greatly increased his respect among the Hindu populace. But Aurangzeb reinstated it, and this decision became a major economic blow for Hindu traders, artisans, and farmers. Collecting jizya was no easy task. Officials would go from village to village, identifying non-Muslims and collecting this tax from them. Many times, those unable to pay would have their land, cattle, or shops seized. This created not just financial strain but also mental distress, and it became a major reason for the growing distance between the Mughal administration and its non-Muslim subjects. Chauth was another interesting tax. From the name, it sounds like a quarter of something. And yes, in many cases, it amounted to 25% of a trader's income. Chauth was essentially a protection tax, collected with the promise that merchants and landlords' goods would be protected from robbery or plunder. But it was equally ironic, because those providing the protection were often the same people demanding the tax. It was almost like creating a threat first, and then charging you money to protect you from it. The Raahdaari tax, collected from merchants and travelers, was also an important part of the Mughal economy. Whenever a merchant transported goods from one city to another, they had to pay this tax at Raahdaari checkpoints. The official reason was to maintain roads and trade routes. But in practice, many checkpoints turned into extortion spots. It wasn't easy for foreign traders either, as imports were charged duties ranging from 2.5% to 10%. In addition, there was the Nazana. While not technically a tax, it worked much the same way. Whenever someone approached the court for official business or sought special favor from an authority, they had to present a Nazrana. Outwardly, it appeared to be a gesture of respect, but it often blended bribery with formal taxation. Sometimes the amount was so high that ordinary people couldn't even reach the court stores. Artisans and traders were subject to the Katraparcha tax, especially on silk and fine fabrics. This was different from a regular market fee, meaning the same product could be taxed at multiple stages. This increased the artisans' costs and cut into their profits. Lastly, there was the ZUP tax, collected based on the fixed valuation of land. The Mughal administration kept meticulous records for this and ensured that no landowner could escape its grasp. All these taxes filled the Mughal treasury but emptied the public's pockets. Farmers lost half their harvest, merchants grew weary of paying tolls on every road, and artisans paid taxes multiple times on the same product. Over time, this economic burden turned into public resentment, and history bears witness. Once the patience of the people breaks, no empire can last forever.
If you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.